Welcome to Destination Charging, a podcast by Powerdot, your insight into the future of sustainable mobility. Join us as we explore the different perspectives of those who are accelerating the world towards a greener future.
I'm joined today by Sherief Rahim. Hello, Sherief.
Hey, Mathieu. Good afternoon.
Great to have you here. Sherief, you're the managing director at Improved, a corporate finance boutique firm. So you advise on many mergers and acquisition deals shaping the technology, energy, and mobility industries. Can you tell us a few words about yourself and Improved's activities?
Yeah, thank you so much, Mathieu. And you're spot on in the introduction. We're a corporate finance boutique specialized in the tech, energy, mobility sectors. We operate across Europe and North America, where we have a lot of sector specialism with M&A transactions, but also executing fundraising transactions across the whole energy transition and mobility space, and actually everywhere where innovation interacts with the different sectors that we cover. We're a team of 20 people. We specialize in EV charging and done about 35 transactions in the whole value chain of EV charging, including a number of infrastructure transactions, and where we got to know the Powerdot team as well, when we supported you with the 150 million capital raise from On10 Infrastructure Partners last year.
Yeah, indeed, you advised us on that great adventure in May 2022. And you've been at Improved since day one, right?
Yeah, really joined the firm straight out of university. Initially, we focused on the technology sector. 10 years ago, I think there were maybe two electric vehicles on the road in the Netherlands. And around that time, also quite some EV charging companies started to build companies and thinking through how the future of e-mobility would look like from a charging infrastructure perspective. We were quite broadly focused on different sectors in the technology space, including enterprise software, fintech, marketplaces, conferencing, telecoms. So we saw quite of the developments in technology, and we're supporting entrepreneurs, investors, and corporates at that time with capital raisings and M&A transactions in the tech sector. In 2017, we saw a huge increase of interest in the e-mobility space. And since then, we've specialized in this domain, and we've seen the market grow at an astonishing pace. We've seen companies flourish and doing quite some interesting strategies and execution of business plans over time. And I think the last 4 years have been really interesting with the companies we've been following for quite a bit of time, maturing and growing to certain levels that now are becoming market leaders and consolidators and really mature companies in this e-mobility transformation. So really joining Improve from the start, growing along with the firm, but also following sectors that have tailwinds and growing at a very rapid pace. And it's a joy to work in the e-mobility space with companies like Powerdot.
Great. And so you mentioned 35 transactions. That's just in the e-mobility space?
Yeah, that's only EV charging. So we work with infrastructure companies like owner-operators, from passenger vehicle destination charging CPOs like Powerdot, but also fast charging networks across highways, truck and commercial vehicle CPOs. So that's really the infrastructure side of the business. Then from a technology standpoint, you have hardware companies, software companies, energy management plays that really interact with the whole e-mobility transformation. But also service companies, and I think every company that touches upon the EV charging space, coming from different angles. That where we have done around 35 transactions in this domain.
Nice. And so when was the first transaction? How far back does it take you?
That brings us back to 2017, a company called Newmotion. We were selected as the advisor to actually initially start with a capital raising for Newmotion. But we realized it was such a strategic domain. We had utilities, oil and gas majors from all over the world coming to Amsterdam to pitch to Newmotion why they were the preferred acquirer of this business. And that actually was quite an interesting moment where we saw all the business plans of these large corporates looking to acquire capabilities in this EV charging domain. And then we realized how strategic this was. So this was back in 2017. In the end, Shell bought this business, put us on the map on the e-mobility space. The day after closing the transaction, we were actually invited to pitch on Alego, a business that is now publicly listed. But at the time in 2018, we did a transaction with Meridiam, carved out Alego and sold the business to Meridiam, a French infrastructure fund. Thereafter, they did a listing, and the company has been growing ever since. But this was really early days. In the Alego transaction, we actually saw a lot of infrastructure funds really looking at the EV charging space as the next frontier of infrastructure, of growth in infrastructure, where they could put money at work, get the right risk and return profiles that they were looking for. And we actually saw a whole range of infrastructure funds looking at the EV charging domain. So with that spectrum of the oil and gas, energy groups, and infrastructure funds, we were at that time really the first advisor with a solid track record in the EV charging space. And that gave us a footprint to further expand into this domain. And we've done that together with our team that has been doubling down and really focusing on this sector, but also not only our core team, but also some associate partners that we work closely with, coming from really the industry, our senior advisors that have operating experience and have a lot of track record and expertise in this domain as well. And we collaborate quite intensively with them, and we're proud to call them our associate partners. And with that, we have a unique team that's set up to support entrepreneurs and investors and corporates in this domain and to support them in capital raising and M&A transactions.
We worked together in 2022 for our 150 million euro fundraise with the private equity fund Antin Investment Partners. Before we dig deeper into that phase, are there any highlights that come to mind during our adventure together?
Oh yeah, I think we had a very interesting collaboration. I really look very positively back to the collaboration with the Powerdot team. Again, a very competitive process with a lot of interest from investors. I think if I look back, one of the key moments that I find particularly interesting was actually the first meeting with the full management team of Powerdot. You presented the team, the full team, the strategy, the objectives, the thinking on how to deploy charging infrastructure, following the strategy and the thesis. And it really resonated well. And I think it was a very interesting and special meeting where we got really convinced that this was a platform with infrastructure characteristics, with a team that can execute, and with ability to raise capital. So then we decided to move forward and to develop the plan. I think we called it Project Kilimanjaro because it was quite a climb and quite an ambition. But in the end, we got there with a high quality partner of Antin Infrastructure Partners. I think definitely a partner that can support Powerdot to the next phase. There was interest from other high quality funds. But I think it was really the team and the collaboration, and always with a laugh and having a lot of fun together when working on these highly intense projects. That's really stands out. And I think thinking back at the time that we were collaborating really intensely, one of the most impressive things I think really was the team of Powerdot, and I think that was also a critical aspect of the success of the project that we were working on.
Yeah, so that was Project Kilimanjaro. We're very fond of summits at Powerdot because when we launched France, it was Project Mont Blanc. So there's a common etymology to all our projects. And so if we roll back in time to 2022, it was really the year of investment rounds in the EV charging space. We had a waltz of players raising hundreds of millions. You know, off the top of my head, you had Ionity, who raised 600 million euros with BlackRock, Electra raising 160 million euros with Razeo, NW Group 300 million euros with R Green. Of course, we were in there with Antin, and at the end of the year, we had Bump with 60 million to 180 coming from DIF Capital. So it was kind of as if all the infra funds were victim of FOMO, or fear of missing out, where they all wanted to place their bets on their horse. If you look back on your 10 years of experience, were there other industries where you saw they had this landmark year of fundraising where all the players went in there in a race to raise as much cash as possible and try to beat the competitors?
Well, obviously, the EV charger space has some very interesting characteristics, which resonated really well with infrastructure investors. But let's say if you draw some parallels to other infrastructure, other kind of asset classes where infrastructure funds have deployed a lot of capital, you can look obviously at the telco space, fiber, have some comparable dynamics. So I think there are some other asset classes that have shown comparable dynamics. Also now, quite recently, battery storage deployments have increased from an investment perspective as well. So from that point of view, really FOMO, I don't think that was really the case. I think it was a good year from a perspective that you saw interesting companies coming to market, high quality companies looking to raise capital. And also at the interest rates at that time and the valuation levels that investors were willing to pay for a good year to execute transactions, and also for infrastructure funds to find the platforms to back and provide the capital and the fuel and the firepower to expand and execute on the plans. And the next wave of transactions, I think, are really kind of lower cost of capital pools of money that will come at play. So pension funds, core infrastructure funds, but also non-dilutive capital instruments. We see more debt capital coming to the market, lenders getting comfortable with EV charging. So that's really the next frontier of capital going into the sector that we see. And I think that's also maybe some parallels that can be drawn with other asset classes where you've seen structuring and financial instruments maturing at pace, and that's where we're seeing the next waves really. Together with still quite some infrastructure funds that are looking to back platforms in this space, look for high quality assets, and they're still around. Looking for quite some of these platforms still looking for capital, and I think with an edge and with high quality management teams, we do foresee quite some successful transactions still taking place over the next 9 to 12 months as well.
So you mentioned telco, fiber, battery storage, carbon capture as similar industries that went through the same phase. And it's true that we often compare EV charging as the new fiber. And actually just a few weeks ago, I was at an event hosted by Oric, the law firm, where they have this infra week where they do a series of conferences on different infrastructure dynamics. And the conference on EV charging is EV charging the new fiber? And if we look at how fiber has evolved, what do you foresee the future of EVC networks to be? And what do you foresee the future of CPOs to be? If the same dynamics that happened on fiber play out on EVC?
If you think about, let's say, some of the key dynamics and where we believe the successful companies will be, it's really the ones that have a clearly articulated strategy and are able to create density in certain geographies. So if you look at it from a country by country basis in Europe, it's really about dominating or being a leading player in a certain market where you have barriers to entry, where you have a certain level of density, where you can create scale, quality, but also that level of operational excellence that will enable you to grow to profitability. I think those are some really key characteristics that we see, that we would see for the successful companies in this space. And I think the next 18 to 24 months will also show some of the platforms that will not succeed, but also will struggle to pick up the pace and to follow the pace of some of the leading platforms. So it's, I think, a mix of some fundamental characteristics of these CPO companies, and operators, together with the right backing from equity investors, but also ability to tap into further funding from either equity or debt or a mix of both in order to continue to grow. But it's because it is a land grab that EV charging is in. And with the right location selection strategy, site acquisition strategy, proof points on utilization, I think that will really create at scale some very interesting platform companies that are going to further grow and to also outpace the competition going forward.
And if we dig into that and you see how fiber and the telco industry evolved, at the time they were selling megabits per unit, and then it shifted. This got completely commoditized, and it shifted into pure subscription models. In our business, the megabits are the kilowatt hour. Do you think it's feasible that we shift to a subscription model with energy, or we'll still stay in this unit selling model, given that energy production actually does have a marginal cost, whereas compared to megabits, it's much lower?
Yeah, we see some interesting developments on the pricing models. I think also quite some kind of that part of the value chain, really the mobility service providers are also kind of the ones really selling the kilowatt hours to the consumers or to the businesses. If you look at that space, kind of an all-in subscription would be very difficult because it will impact your margins from an energy perspective. So I think there's a fundamental difference with the telco model, with real subscriptions that are all in. So from that perspective, I think there are some differences. We do see quite some aggressive pricing, still some land grabbing on that side as well to get customer bases. So OEMs, utilities, and quite some strategics that are bundling their offering and adding EV charging to their offering. So I think that's a very competitive space to be in. And I think what's the interesting part of some of the operators that the only infrastructure that you would be independent of where the pricing will be, you'll be able to pass through price increases, or at least be able to be not sensitive to pricing pressure. And I think that's also the whole reason for having a solid footprint and a strong footprint in a given country, because it will increase your price power and enable you to pass on any price increases or margin compression going forward. And I think that's where the leading CPOs will definitely have a differentiator versus some players that have a smaller footprint in a given country. So I think that's a real important aspect from an infrastructure perspective. And if you want to draw the parallel to the telco model, I think maintaining that pricing pressure and having the density in a certain country in order to keep that power in the value chain is going to be a fundamental, important strategic domain as well for operators to show presence and to show strength as well.
Yeah, so you mentioned that currently the focus of most CPOs is land grabbing, and it's really this site acquisition strategy and execution. We're really in kind of a race against time. What other challenges do you see CPOs facing on the short to midterm, and how do you see them overcoming them?
Yeah, land grab is definitely one of them. So we do see site acquisition and definitely the strategy around site acquisition. So we see that kind of the value of the real estate for CPOs is becoming a more important topic. So how do you compensate, or how do you partner up with location owners, or go for a different type of strategy around site acquisition? That's definitely a very interesting question. So we've seen a lot of companies with strong pipelines and ambitions, but really ability to execute on that and get access to those locations. I think that's really an important driver of value. Some of the other challenges that we see are around grid connections, grid grid congestion, and some of the delays because of the grid operators not being able to pick up pace along with the EV charging companies. So that's definitely an interesting area where there can be some large differentiation with operators, EV charging companies that have been able to secure grid connections at scale and do that successfully and have the ability to deploy quite large installments. I think the main challenge or the main proof point of some of the companies out there is really proving utilization patterns. So how do you go around identifying the right location? What is the traffic analysis? What is the underlying analysis that's being done in order to identify the right locations? And then showing the utilization patterns that are projected, but also are outperforming markets. So you're getting a larger part of the market share than your competitors. And I think with that, utilization is definitely a key indicator of quality for many of the EV charging companies out there. But also from an energy point of view, working with grid operators and getting the grid connections and managing quite large installments of EV charging equipment together with the operating expertise. And maybe to refer back to the success of the fundraise that we were doing together, I think that's really where Powerdot stood out on all the different aspects, and also why I believe that the fundraising was very successful and got quite some interest, together with the ability to expand across markets and go after quite a large total addressable market and really make a dent and an impact from that point of view. So I think, let's say, the decisions made over the last 2 to 3 years will really drive the success of many of the operators going forward now. And I think it's a very interesting point in time because it's going to be more challenging to raise capital going forward. There's going to be still capital available for the high quality platforms. We're very confident on that. And there's going to be different pools of capital going to be unlocked for EV charging companies that can show, based on the strategic decisions that have been made, that they're on that path to profitability and to market dominance in certain countries. So I think to bring it really back to Powerdot and the capital raise, and also how we see other CPO companies developing going forward, I think those are really the key aspects: having the right team in place, having a strategy, being able to execute, and showing that path to profitability.
And so you mentioned the capital raise and that it's going to be more of a challenge now to raise capital, especially given the current interest rate environment. We've had this change of wind at the end of 2022, and since then we've seen much less fundraising, much lower valuations. So how do you expect this to unravel in 2024? And how do you see CPOs seeking funding in this more constrained environment? And what kind of exit opportunities do you think they can aim for, and at what horizon?
Yeah, all very interesting questions. I think the changing market for, let's take infrastructure investors driven by inflation and interest rates, that has definitely have an impact. So we do see that there is still interest in this domain, still interest to deploy capital, but there's a lot more scrutiny from investment committees to approve investment decisions. So the focus on higher quality platforms that are more mature, that is definitely there. We do not in many cases see that valuations are impacted, definitely in private transactions, at the scale that you would see in public asset classes. So some of the public EV charging companies, they have a tough time from a valuation perspective. But in the private transaction space, there are still quite some high quality assets that are getting good valuations. And it's all about positioning. It's all about hitting the right points, but also showing the proof points that back that up. Really going to market with an ambition these days, it's tough. You need to show the real proof point, the maturity, the ability to operate and to execute. And with that, I think valuations are still at quite some attractive levels. So many exit opportunities on the horizon that we foresee coming now. It's about consolidation. So how to expand from a platform across certain countries into new countries, how to move from a high quality platform that's backed by an infrastructure fund, but also to be able to show to move towards profitability. Are there certain investments that need to be done, but also are there certain assets that can be picked up at attractive valuation? I think that's going to be the next wave of transactions, but also new pockets of money coming to the market. So pension funds, we see quite interested in EV charging and the broader energy transition space. They're going to be quite active there, we foresee. And core infrastructure funds, different pockets of capital that are going to put at work. So we do see quite some large mega funds still active and looking to deploy capital. I think also the independent platforms are going to continue to win market share from some of the incumbents. I think the speed and agility of having an independent platform like Powerdot, that's definitely something that will pick up during 2024. And I think some of the incumbents will struggle to maintain the pace of the incumbents. Of the independent players that are winning market share and are growing at pace. And that's also going to drive some large acquisitions from strategics that are looking to remain market leader in the space that they've historically been dominating, and acquire capabilities and land grab through M&A and doing some transformational acquisitions in this domain. I also think that there are still infrastructure investors out there looking for the right platform, but a bit more cautious of are they backing the right quality platforms that they're looking for, and they're going to be backing the right capabilities and the right value drivers that we discussed. So again, more scrutiny from investment committees, but there's still a lot of money available to deploy in this space.
And you mentioned the ability to expand to other markets. What do you see as the next geographical frontier for the EV charging space? We at Powerdot, of course, pushed it pretty far as we've launched Poland and are already one of the largest players there. Where do you think that the next big markets to witness an arrival of many CPOs and a large-scale deployment of EV charging? Which ones do you think will they be in 2024?
Yeah, interesting to see, because the markets that have electrified first, obviously Norway was way ahead. We also did a transaction quite early on in Norway where we supported Recharge in divesting the business from Fortum to Infra Capital. So that was obviously the first market where you saw how e-mobility or EV fleets would charge at a larger scale than was ever seen on the global markets, set aside China. That gave us some very interesting insights on how EV charging, how successful EV charging networks are deployed in other markets. The bigger markets that have been electrifying fast are the UK, Germany, and France. The Netherlands has been quite far advanced. I think the next waves that you'll see are really kind of the Spanish market is showing some interesting traction. I think, or I know you're active there and building some interesting network in Spain. Central Europe, I think, is quite interesting from an expansion point of view. Set aside, let's say, the European market or the passenger vehicle markets, where we really see the next frontier of growth happening, it's commercial vehicles. So commercial vehicles are electrifying at pace right now. Many of the logistical companies are facing, for instance, in the Netherlands or in the UK, zero emission zones. Those regulations are going to kick in and going to drive a lot of growth of electrification of commercial vehicles. And I think that's really where we also see the next wave of growth taking place over the next 3 to 5 years. And then set aside that, obviously the US market, it's not really an expansion market for CPOs out of Europe going into the US. It's a very difficult market to expand into. But if you think about the next waves of growth, the US market is really 2-3 years behind where we are in Europe from an EV penetration standpoint. And I think there you'll see a rapid acceleration of e-mobility taking place as well.
So if we just take a step back now away from electric mobility, you've of course been working in the investment space for 10 years now, and been advising and accompanying entrepreneurs and providing services and advice for them to realize their vision. What have you noticed are the common traits across these entrepreneurs and these companies that make them successful to fundraise in the first step, and then to be able to be successful in deploying the capital that has been given to them?
It's a very interesting question. It's a difficult answer. I don't think there's a common trait that I've seen across entrepreneurs. Every entrepreneur that I've worked with is different in itself. Some really hands-on in the details, some more hands-off, kind of really looking at things from a high level and identifying strategic directions for the companies that they lead. I think if I would need to kind of choose one trait that I would see as common across all the entrepreneurs I've worked with, and definitely in the tech, energy, mobility sector that I'm active in, it's really the visionary entrepreneurs that are standing out and being able to articulate quite complex value drivers and differentiators, which can be fairly abstract many times, to investment opportunities, and to articulate what are the value drivers and differentiators, how to succeed in some of these mega trends that we see in these domains. So I think that's from an entrepreneur standpoint where I would see kind of the main differentiator and one of the common traits that I could think of. And I think maybe from Powerdot's perspective, speaking to the founding team, I think was really the execution capabilities and how to bring that vision to life in the pitch and in the investor discussions, and really show, based on proof points and ability to execute, high confidence on executing on the plan. I think that really stood out from the Powerdot team. But yeah, I think that's quite a specific one. But again, the vision and ability to pitch and to present kind of this e-mobility thesis that everybody should charge wherever they go, and how to translate that into investment opportunities. That was really a key differentiator, and how we got quite some good interest from infrastructure funds.
Yeah, it was. It takes me back to those management presentations that were 4-hour marathons, where we had to be extremely sharp and deliver that vision. And I think we both managed to frame it in a very enticing way. So it was definitely a great performance. And so to finish off on a light note, what would you say is the worst mistake you've seen happen in a fundraising pitch?
Well, we like to come always well prepared to fundraising pitches. So I need to think really on one of the big mistakes. Well, it really starts really with simple things. When you think about fundraising pitches, it's about being well prepared and knowing who you're pitching to. So doing a bit of homework of, if you speak to a fund, what are other type of investments that they've done, knowing what are the type of the type of profile investors you're speaking to. So every investor has a different risk and return profile, and if you're speaking to an infrastructure investor, it's a completely different angle and approach that you should take when you're speaking to a kind of a venture capital fund, for instance. So knowing who you're speaking to, I think that's one of the big one of these simple things you can do, but has a big impact on the success of your pitch. And some really simple things of having the right corrections. I think one of the biggest mistakes maybe is to be on the go when doing an investor pitch. It's very important that you come well prepared and you make best use of everybody's time. So I would bring it down to very simple things. What could be So very simple mistakes to be prevented if you come well prepared and you take the time to also do your homework and make best use of everybody's time. So I think those are some of the I would think mistakes that could be easily prevented if you dive into that. And also if you know the sector and have a team around you that's educating you on kind of how kind of strategics are thinking about certain businesses, what are the rationales of investing into certain companies, understanding at quite a level of detail what the other party is looking for and how to pitch to those investors. And that's why we as Improved, we do believe that having sector expertise is fundamentally important as an advisor to be able to support our clients and our partners in successful capital raising and M&A transactions. So I think that's really it. Coming well prepared, knowing who you're pitching to, and tailoring your pitch to what is important to the counterpart, and also what you can back up with real proof points. So I think those are some of the key points when pitching and looking for a successful fundraise.
There you have it. Do your homework and do your KYC.
Exactly.
Thanks a lot, Sherief, for joining us and sharing your insights. It's been a pleasure talking with you. So you can, where can we find Improved? On LinkedIn, and what's your website?
Yeah, Improved is online, fully present. So you can find us online. Our website, improvedcf.com. We're on LinkedIn. We have a newsletter where we aggregate all the e-mobility, energy transition, and broader mobility news. So please subscribe to our newsletter. And if there's an interest to further explore, our contact details are on the website, and we're there to support entrepreneurs, investors, and corporates in this global transformation in the energy transition and mobility space. So very much looking forward to continue to do so, and to also follow the journey of Powerdot and to support wherever we can.
Thank you for listening to Destination Charging. For more insights and to stay connected with our mission to accelerate sustainable mobility, please visit our show notes for links and further resources. Don't forget to review and subscribe on your favorite podcast app. Until next time, and keep moving forward with Destination Charging.